Hi, this is Matt Bowman with Vader News. I'm here with Adeo, founder of The Funded, a social network for entrepreneurs seeking venture capital. And Adeo's recently embarked on a new venture, the Founder Institute. Adeo, tell us a little bit about this.
Well, we started the Founder Institute because 200 CEOs would apply to The Funded every day, but only about 10 or 20 would get in. And when we looked at the other, 180, 190 CEOs and said, well, they have the passion to start a company. They have, all the raw material to build a great startup, but, they just don't pass the muster. We wondered, well, what could we do to help them? And that really was the genesis of the Founder Institute. We said, imagine if we take those people and put them through an aggressive training program, give them all the tools to succeed, what would happen?
So tell us about the structure here. It's a 4-month program.
Right.
It's $450.
So you apply, and it's a pretty aggressive application process. In fact, everything that you do with the Institute is designed to make you a great CEO, a great founder. So you have to build your LinkedIn profile, you have to get people to recommend you, you have to do a video, and these are all things that we think are important to be a good founder. Then you apply, and once you apply, we only let in about less than half, because we also then aptitude test you and personality test you. For example, we look for your ability to handle stress in the application process.
How do you test that?
Well, we test it in a number of different ways. There's literally a written and multiple choice exam that you take. It takes about an hour and a half, and we look at your overall mental competency. There are a bunch of questions around your ability to handle stress. Then we make you sign and decide to enter the program in a very short period of time. And a lot of people, they get accepted. They're like, oh my God, I'm accepted. And then we're like, okay, now you need to decide. And the idea is that, when you're a founder, when you're a CEO, you're being hit with tough decisions in a short duration of time all the time.
Sure enough, you got to judge and act quickly, I suppose.
Right. And the $450 actually doesn't cover the costs, but it's all part of making that decision a little more challenging, a little more stressful in the period of time given.
So tell us about, is this like a boot camp, or, if the application process is that intense, do you go in and do they start doing push-ups? Do they have like drill sergeants yelling at them?
It's tough, but it's not at all a boot camp. It is designed to replicate everything you need to know to run a company. So every week, you top CEOs come in and really give you the dirt on what you need to know as a founder, on everything from coming up with an idea, patenting that key aspects, or protecting your intellectual property, setting up an accounting system, creating budgets, all the way through to raising money. You got experienced guys and girls telling you everything you need to know, but then you got to go and do an assignment. We then set up working groups, and we design these working groups very carefully. So we'll have like one person who's remote in the group, and they may be the president of that working group. So now you're working with your peers, completing very difficult assignments, and in management situations, much like you would experience in a startup. So everything is designed really to help these people, help these founders, learn the ropes the hard way in a very forgiving environment, right? Mm-hmm. What's the worst that's going to happen if you make a mistake? We say, hey, you're not keeping up with the class. But let me be clear, in the real world, those same mistakes would be deadly.
Mm-hmm. What kind of arrangements do you have in terms of funding? Do you help these guys find it afterwards?
Absolutely. Not only that, so traditionally programs like this will have demo days or things of that nature. That's set up for failure, right? If you put 50 companies or 20 companies in front of investors, it's a crowd mentality will center around the best couple, and they'll get all the attention. Meanwhile, the 27 or 17 others will sit there twiddling their thumbs. So what we do is we invite investors in. We just did this a couple weeks ago. and we sit them down at tables of founders. So there'll be 2 or 3 investors among 5 to 7 founders. And what will happen is each founder at the table has a few minutes to go over their idea and get feedback. So rather than getting everyone centered on the best few in the room, we move the investors and the founders into smaller working groups, much more discussion-oriented, and establish relationships that then will lead to a funding later on. So we're very proactive in helping. And by the way, you want to know how good it works? 50% of the companies that presented got follow-up interest. That's unheard of.
So do you guys work with other incubators that are coming in, or I mean, do you go out and work with like Y Combinator, or do you just find
people think we're competitive and we're not? We look at first of all, anyone who's helping startups in my mind is a hero and deserves a feather in their cap. So, but there is. So, for example, I could see people coming from the Founder Institute and going into other incubators. We're really early. Right now, about 2/3 of the people in the program have good jobs at top companies like Cisco, etc. They haven't even quit, and we're in the 6th week of the first semester.
Awesome.
And we don't mandate that they quit their job. We actually think, I can't think of a company I didn't start while doing something else. So why should we expect others to behave differently?
Well, it's interesting because I've been hearing a lot from a lot of investors that right now what they're focusing on most is quality. And
exactly.
They're not looking at sectors. There's really no bubble in a startup sector right now.
Yeah,
they're looking for quality, and that's what you guys are providing.
Quality is tough to deliver, right? So you've got to think, what is quality in a startup? Well, number 1, they're well trained. Number 2, they have good vendors. Number 3, that with their training and good vendors, the things they've done, like the accounting system, their legal docs, are all set up correctly. So we've gone through and said, wow, we can actually have a meaningful impact on all of those things by starting out really, really early in the process. So I had Wilson Sonsini draft from scratch the best operating agreements possibly in the history of operating agreements, and we're giving them for free to founders in the class. I've got the Brenner Group setting up their books and records day 1. I've got Intuit giving them QuickBooks. So we're ensuring that these companies, you know, let's put it this way, as an angel investor, these are the things, and intellectual property, etc. You worry about these things. There is no worry with the Institute.
Great.
We certify that the companies that come out the other end have all those things with big, strong checkbox, or checks in the checkbox.
So, Adeo, you take equity in the companies, and you also let others take equity. How does that work? Explain the process.
Yeah, so actually we take warrants. And every person in the program has the opt-in ability to give 3.5% of their company at the first round's equity and valuation to the Institute. Now, why would they give equity to the Institute? Well, we offer them value back. The first thing is everyone who gives that 3.5% into the program gets a share of the value generated by all the peers in the class. It also serves to compensate mentors who are helping them learn the ropes. So essentially you have advisors paid for to help you grow your business by that 3.5%. Last but not least, when you issue those warrants to the Institute, we protect you from being unwillingly removed from the board of directors of your company. Because if you are removed, there's a financial penalty back to the Institute that we will use as severance. So we call, the way I like to say it is, the carrot is the stick. So the idea of not joining the pool, not contributing warrants to the program, is so bad that it's a stick to prevent you from being afraid, or from walking away from the opportunity. So it's a very unique model we have with the warrants and the shared pool.
Well, Adeo, thank you very much. And this is Matt Bowman of Later News.